It is no joke when I say that Calgary just had a record-breaking quarter. We have not seen market conditions this tight since 2006. So in today's video, I'm going to highlight what that looks like. Hi, my name's Adam Fife, and I create value-driven content for my viewers and clients. Give me a few minutes, and I promise you're going to learn something new. Make sure to browse the channel as I do create other content related to the Calgary real estate market, as well as some activities and things to do around here. So let's get into it. So I want to start this off by saying two things. First, the Calgary Real Estate Board comes out with some amazing market reports, full of information, easy to read, and visually pleasing. So Kreb, if you watch this, keep it up. Thank you very much. I do also want to point out the fact that this is Q1 of 2022. We have seen some crazy price increases and some very tight market conditions. Now, with interest rates rising and other factors being put into play, market conditions are supposed to slow down a bit, but we are not fortune tellers and we cannot tell you what's going to happen and not happen. So what we can do is we can look at the data, look at the forecast, and we can kind of make our own decision. My goal here is to make sure that you have all of the relevant information to make an educated decision about the real estate market. So in the table of context here, you can see there's a few things. The City of Calgary, the economic update, all property types, and the surrounding area. The only thing I'm really not going to read is the surrounding area. So this first slide is the City of Calgary. Inventory levels declined over the last quarter and were 30% lower than long-term trends, reflecting the lowest quarterly inventory since 2014. Conditions have not been this tight since 2006, which is also the last time that we saw price gains push over 16%. I mean 15%, push over 15%. This is a quarterly gain of nearly 8% and a year-over-year gain of 15%, not 16. While sales were expected to be strong in the first quarter, demand continued to exceed expectations. Expectations on rising rates and further price gains is likely pushing consumers to enter the market as soon as possible. The pace of sales is still expected to cool later off this year, and that is because of those rise of interest rates. Now on the right-hand side, again, this is total inventory of Calgary. So if you take all property types and put them into one, this is total Calgary. So the economic update. Compared to last year, we have seen notable gains across many industries with the highest number of jobs created in construction, wholesale and retail trade, professional, scientific and technical, information, culture and recreation, as well as public and administration sectors. This combined with the generally stronger economic conditions in the country has caused the Bank of Canada to raise interest rates sooner than expected, with more aggressive gains expected as we move throughout the year. Now on the right-hand side, all about the supply. Housing supply has been an issue across Calgary and surrounding areas. The federal government has proposed a number of initiatives that focus on housing supply. With that being said, I am going to link a video in the description of a local mortgage broker talking about all those incentives. It's actually a really good watch. While it's still very early in the year, new home activity is not seeing a large boost compared to last year. This is likely related to the challenges with labor and supply disruptions that have been extending construction times. So this slide is quite interesting because the Calgary Real Estate Board has dedicated a full slide to 2006. Market conditions have not been this tight since that era, so they thought it was very important for us to understand what happened. Housing market conditions today are resembling many of the trends seen in 2006. These tight conditions caused benchmark prices to rise by over 45% for an annual level of $342,000. Prices rose further in 2007, pushing it up to $416,000 in 2 years. At the time, the Alberta economy was experiencing exponentially strong population growth thanks to the strong labor market and economic growth driven by the energy sector. 5-year lending rates were also much higher back then at over 5%. Conditions didn't shift until the financial crisis, which hit at the end of 2007, causing a recession in many countries around the world, including Canada. If we fast forward to today, prices have seen some significant gains, leading to a speculation of a future price correction. But in Calgary, these price gains come after years of losses. The gains were driven mostly by the surge of demand relative to supply. This was due to low lending rates bringing people back into the market, as they were either priced out before the pandemic or they were not financially impacted by the pandemic's restrictions and found themselves with more savings. While we could see some monthly slippage of price gains as the rates rise, a full reversal of all gains in home prices is not expected, as long as the economy activity continues to improve as expected. The more likely scenario is that there will be some adjustment to supply and demand, resulting in a slower growth in prices relative to the levels seen today. Next, we're going to touch on the four sectors, starting with the detached market. On a quarterly basis, the months of supply dropped below 2 months in the first quarter of last year and stayed at that level until the first quarter of this year, when the months of supply dropped below 1 month for the first time since 2006. This has resulted in significant price growth across all districts. In the first quarter, benchmark prices rose by nearly 9% compared to the fourth quarter of 2021 and nearly 18% than levels of last year. Prior to the pandemic, detached homes under 500,000 reflected about 42% of all the inventory compared to today, where they only reflect 23% of the current supply. Now on the right hand side, you can see a lovely map. This map shows the price gains in percentages. The dark blue is 15% and up, where the light blue is about 10 to 15%. On the bottom, you can see some statistics year over year averages from Q1 of last year in the detached market. Next, let's touch on semi-detached. At the end of 2021, we started to see the same shift towards the strong seller's conditions, and by the first quarter of this year, the months of supply dropped to just over 1 month, making it the tightest quarterly average since 2006. While this product type still has inventory for homes priced below $500,000, it has also decreased considerably since pre-pandemic. It went from nearly half of the supply priced below $500,000 to 36% of the supply falling in the lower price range of the market. So on the right hand side, again, you can see the dark blue is some high price growth for those quadrants, whereas the quadrants with the lighter blue only have 10 to 15% price growth. On the bottom, same thing, year-over-year averages compared to Q1 of last year. Next, we'll touch on the row or the townhouse sector. The row market has generally been better supplied than both the detached and semi-detached sector. But as of late, this has also shifted for the property type as well. At the start of 2021, the months of supply was nearly 3 months, but had mostly tightened throughout the year. This trend continued into 2022, with the months of supply dropping to 1 month, something that is not seen again since 2006. Price growth in this segment started later than both the detached and semi-detached segment, and prices have not yet fully recovered from previous highs set in 2015. Now on the right hand side, you start to see a little bit of a shift here. You see some dark blues with 15% year-over-year gain. You see some light blues with 10 to 15%, and then you see the city center with only 5 to 10% growth. And again, on the bottom, year-over-year compared to Q1 of last year. And finally, the apartment sector. As affordable options in the detached, semi-detached, and row sector started to ease, we saw some considerable boost in the condominium apartment sales. Strong sales and lower inventories caused the months of supply to push below 2 months. This is a significant change relative to last year at this time, where months of supplies exceeded over 5 months. Now I remember that. There was a lot of condos for sale last year, and they were not moving. The shift to price growth is welcome news to sellers who faced price declines throughout 2015 to 2020. Despite the gains felt this quarter and last year, prices remain below the previous highs, and it will still take some time before they fully recover. Now on the right hand side, you will see there's a little bit of a different setup for this map. Condos did get affected very heavily in 2015 to 2020. So the southeast with the biggest price growth at 15% and up. A lot of the quadrants around city center had 5 to 10% price growth, where the city center actually had -2 to 0% price growth. So for those downtown apartments, they haven't really shifted since last year. So this is a start to the surrounding areas of Calgary. Now I will read this portion here, but moving forward, I'm just going to slowly go through the slides and allow you the opportunity to pause and read them on your own. Please refer to the timeline below, because I will stamp each individual town below so you have an easier way of looking at them. When considering all of the larger areas around Calgary, there has been a consistent theme in the first quarter: exceptionally strong demand, not enough supply, and significant price growth. For all these areas, it would take a significant shift in demand or supply before we start to see any easing of the strong sellers market conditions all these centers are currently facing. So this next slide is Airdrie. Now again, I'm not going to read it, but if you want to pause here, feel free. A little bit of Cochrane. Again, on the bottom side, you can see some of the year-over-year averages. A little bit of Okotoks. I love this photo. The mountains are amazing here. Chestermere. If you really enjoy sailboating and you do like that lake life, this place is perfect for you. High River. Haven't really spent a whole lot of time here, but I hear it's a pretty nice place. Strathmore. One of my first sales was actually in Strathmore through Reed Builders. Now that was an interesting situation. If you want to look up some research about Reed Builders, I highly suggest it. Rural Rocky View County. Absolute best county to live in my personal opinion. I love it here. And that's it, folks. I appreciate you listening to this. I hope it wasn't too long. If you have any questions, feel free to contact me. My information is below. I will link up some videos here so you can continue to watch some stuff about Calgary real estate market. It's been a pleasure sharing this stuff with you. So until next time, peace.